This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, now let's turn to the discussion of the gold market. Well, yesterday's the price action on the gold market was mixed, since at the beginning of the trading session market has shown the attempt to continue move to the downside, but later that day has returned right back. Well, in general, I would like to remind you that our thought and our expectation of the downward move has the target only to get the better the better point to enter in the long position. Because as we discussed in weekly research, in general the gold market has the hidden potential bullish power. Its overall price action and the consolidation, some fundamentals suggest that still gold has more bullish signs rather than bearish, at least at the current moment. And we said that until this low will hold, that could be the low of the year, since market already has tested the yearly pivot point with this swing low, returns right back. Until this low will hold, we should search for the possibility to enter on the long side of the market. And our first level to watch for was the 768 support from that swing, because that could be an agreement with this downward ABCD pattern that could get us into this area and could give us the nice entry point with the relatively tight stop to the upside. This could be some sort of the Gartley's action. So initial thing, ABCD retracement, so Gartley's 222 pattern could be in place. So that is not the bearish sentiment on the market. That is how we would get potential entry point. We are not bearish. We just would like to find the entry point that will give us as less risk as possible. That's why we watch for this potential move to the downside. But if you're a scalp trader, you probably could try to take the short position with the hope that market will reach this area. But that is not then our main context, not our main target to enter short to get to the right there. Our major target is to get the point of entry as closer to this current year low as possible, and 60-40 area is very nice area to watch for from that perspective. That's why our thought about the potential move to the downside with this ABCD pattern has mostly technical application, not our context and not our trade that they would like really to do. Because if you're a positional trader, you should not enter short. You should watch if market will hit 60-40 area. You could try to enter on the long side of the market with the stops right below the current year's low. So in fact we would like to see any upward development, whatever market will show us. If it will be upward continuation right here and break out of these highs, very good. We will enter a retracement to the first retracement. This could lead to the greater ABCD pattern to the upside. If market will give us a retracement right to the 60-40 area, well, excellent. That will give us the entry point very close to the current year low with a relatively tight stop. This at least this is the single area that we could watch for currently, with not any other beacons where we could enter on the long side of the market on the daily time frame. But let's return to the pattern that has been formed, and we have discussed it on the daily time frame. That is the bearish stop grabber right here. Yesterday you can see that market has formed another stop grabber, and before that day that was also the bearish stop grabber. We see 3 bearish stop grabbers side by side. But what market shows us? Nothing. Sideways consolidation. Now market even shows some move slightly higher. That price action a bit worries me, because if market shows the pattern but doesn't show the action according to this pattern, it could mean that it's ready to show the move in opposite direction, because market doesn't show development to the downside according to this pattern. That is the one thought that could be made right here. The second moment is still pure technically. Until this swing high will hold, the stop grabber is working. It's still actual. And market in fact could continue move to the downside. Until pattern hasn't been erased, we could count on the move to the downside to the 60-40 area. So what from that standpoint we could do? If you're a scalper, you can see that market now stands at 1674. It's very close to the top of the stop grabber. If you would like to enter short with this pattern, you could try, because your risk will be just $10 per contract. This is will not be the significant amount of risk if you will take the 10 part of the lot or even 100 part of the lot. So this is relatively tight stop, but you could get the move right there. So that will be not bad move. It's the ABCD pattern. If you're a day trader, I mean positional trader, you trade on the daily time frame, of course you should not enter short. You just should wait for a potential entry point, either right here, or if market will take it out of these highs, continue move to the upside, enter on the retracement. Your task is to get into upward move. So from that perspective, let's take a look at the 4-hour time frame. What we see? The butterfly that we have specified that also has the target around 60-40, it's 127 extension. Also it has inner ABCD pattern that has target 1618 extension, also that area. Still in place, but it looks not as pretty as it was yesterday, mostly by this price action. From another point of view, market stands right now at the 618 resistance of that swing low. Okay, so gold market, as I said, likes to show the 618 retracements. That has happened. Also, if we will not pay attention to the swing to the upside and just watch this action, we will see some sort of the ABCD retracement to the upside. Who knows? Maybe that is. Maybe market will turn right from this point to the downside. We don't know. But what we do know is that this swing is still hold, and that why this potential butterfly, although it looks a bit goofy currently, still holds as well. And downward move could happen. Now market stands also at resistance, and as I said, this is really small risk that you could take with the hope that market will continue move to the downside. I do not call you to do this, but if you think about entry on the shorter side of the market, that's not bad area to take the short position, depending on your view on the current situation. On the hourly time frame, we could treat current price action as the sideways triangle. So even on the 4-hour time frame, you could see it. Here is this triangle, and here I have drawn it. You can see this consolidation of the triangle. Well, here the butterfly that we also have discussed yesterday, but I have changed it a bit because we initially look at this pattern, okay, but now since market has shown this upward continuation, we have to draw another right wing of this butterfly, but the target of this pattern is still the same, the 1618 extension of that swing to the upside. That could be the way how this triangle could be resolved by the price action, so market could show the breakout to the downside. If market will continue move to the upside, taking out of these highs, it will simultaneously erase all bearish patterns that we now have, the stop grabbers, butterflies, anything. This will be a significant bullish move to the upside. So since the situation on the gold market is tricky currently, and as I said in the research that gold market is now its most difficult market to trade, it's very cunning market, you should decide by yourself what you will to do. So if you think that this breakout could be to the downside, since you have the foundation for that, we have the patterns, we have the triangle consolidation of the swing down. So the swing down, now it's some sort of the triangle consolidation, this is swing down, this is triangle consolidation. That could be continuation move to the downside. That's possible. That is not bad area to watch for, because this low risk, and if market will continue to move to the downside, you probably will have to take the more risk, but the entry will be safer. Or, since, as we said, we're just searching for the entry point for the upside, and you could just wait when the market will show some upward bullish action. So either market will reach the entry point, as we said, around 60.40, or if it will take out these highs, then it will resolve this riddle with this upward continuation, and we will be count on the greater ABCD pattern on the daily time frame. That pattern ABC bottom is taken out with these highs, acceleration to the upside, ABCD pattern to the upside. This will be could be start the upward move on the gold market. That's the second solution. So choice is up to you. Well, I just show you the levels to watch for, how the situation could develop, and what potential targets market has, depending on the potential moves within the current trading session.